Thanks for tuning into this earnings conversation with Amit Chadha of LTTS. They came out with a quarter which, from the expectations that analysts had, was marginally below estimates, but it brings them largely in line with the guidance that they've given for the year. And it's a fairly reasonably strong guidance that they've given for FY23 as well, which will be the course of my conversation with Amit Chadha. Amit, great having you. Thanks for joining in. Marginal, if you will, slip, if you and compared to the kind of standards that you've set, every 50 basis points not met also gets counted as a slip, so to say. But how do you sum up the quarter in light of the guidance also that you've given?
Sure. So first of all, Neeraj, thank you for having me. It's always a pleasure talking to you.
Thank you.
If I look at Neeraj, the whole year, if I may, and then the quarter, right? And I believe, number one, as we started, we were worried about COVID. But as the year panned out, I do believe that the strong demand environment in the electric autonomous vehicle segment, in the digital manufacturing, digital product segment area, right? Overall, and not just us, right? Has been fairly strong and robust. The Ukraine crisis that came about in quarter 4, as well as heightened attrition, was stuff that we didn't know about the Ukraine crime. I mean, this is part of your risk analysis you keep doing, but we didn't believe that either of this would blow up, but it did, right? So the quarter, if I may, could I have had another 500 engineers? I would have been able to do that remaining 50 basis points. I mean, just FYI, I've doubled our recruitment channel. We've brought in AI to do more recruitment. We've taken on 3,000 freshers in the whole year. A global engineering training academy has established now 6 alliances with various universities across US and Europe, including Coventry, that we've done. And we're signing 2 more as we speak, and you'll hear the announcements coming out. So we're doing everything we can to build up that. We were generally used to be conservative on number of offers we'd make to freshers. We made 2,500 offers for people to join us between July and September, the joining season, as people do that. We've collaborated with colleges. In fact, this whole month I'm here in India, we're going to be signing up a couple of MOUs with 2 universities in the areas of mechatronics and sustainability in 2 different places to try and ramp up skill sets. So we are working on the skill set side. Demand we see is strong. But you're right. I mean, am I happy with our results? Overall, year on year, I'm absolutely pleased. I'm thankful to our teams. I'm thankful to our clients in having delivered 20% constant currency. Could it have gone to 20.2, 20.3 had we had 500 more engineers? Maybe yes. But you take it in your stride and you move on. And that's where we are.
Yeah. I mean, can I ask you, it's something that I've wanted to ask every company in your space as well. Sure. That hiring across services companies and probably ERD companies should indicate, or rather, let me rephrase my question. FY23 growth as a result of the deal wins that have been done thus far can be strong. The questions probably come in for what beyond FY23, considering the macro, which seems to be worsening at the margin. But the hiring indicates that managements are not hearing anything adverse thus far. Is that how you would sum up? And I'm just trying to wonder, I know 12 months is a long time frame in the current circumstances in the world, but do you sense that you have visibility beyond FY23 as well, which is as strong?
I do believe that the next 3 to 5 years for ER&D will be a period where it will go up the hype cycle, if I may, the Gartner hype cycle. And there'll be various technology areas that will help that power that. See, you're hearing rightfully so that car production slowed down slightly, and people are saying second half of the year potentially people will not buy so many cars, etc. Right? I have a different view. I don't think so because I believe that this whole movement towards getting more personal space is not going away anytime soon. Right? So I don't believe that the car sales will fall. But even if that is the case, you can look at the tailwind coming from the electric, autonomous, and connected 3 strands that people are spending. Similarly, each segment. So if I take plant engineering, for example, people are not spending in other areas, but they are spending in creating new, smaller plants. So they have little micro supply chains where they can deliver in case there's another lockdown. the whole world has shifted to think from just in time to just in case. So there's a little more inventory buildup that people are doing. So with all that said, some of these tailwinds will continue to power ER&D, if you ask me. The one that hasn't played out, in my view, is sustainability. I mean, we were talking about it right in earnest, and then Ukraine happened, right? And now everybody is thinking about what they want to do. Now, had they had alternative energy pumped up 2 years ago, we wouldn't have been in the problem or the kind of worries that we have today. So you will see that coming up as you move forward. I also believe, Neeraj, that that customers are becoming more conscientious about the impact, the social impact of what they're doing, right? I mean, I have had people that say, you don't send me a tooth comb or a comb or a toothbrush in a big box. You can send it in an envelope, right? These are very small changes that are coming in, but they're surely coming in. So I believe that there's enough technology tailwinds, if I may, and I didn't talk about Metaverse, and I'm going to hold off till you ask me the question.
I
but I believe that these are areas that will continue to power not just LTTS, but others in this space as well.
Got it. Okay. So, okay, that's great, because that gives some confidence about beyond FY23, but we get to that later on. Quick questions on the near term. Growth was expected to be led by ramp up of large deals. Not only, I presume you've done that, and with the order intake really strong, how do the next couple of quarters over? Although 6%, 6 deal wins doesn't surprise me, Amit, because I mean, I looked at FY21 and 2, right? 7 in Q4, 6 in Q3. So you made it a habit of now getting such wins any which ways.
So I love this. It's a good team. They continue to work on proactive proposals, and we do it every 6 months. We refresh and say what's not going to happen. Let's take it out, and then we refresh. In fact, our large deals team just finished the roadshow in the US for 2 weeks. They're heading up to Europe next week. So we used to do it remotely. I said, no remote, let everybody get together. We're doing that, right? Short term, near term, I do expect the growth to continue. We continue to hire. We continue to make sure that we're hiring laterally as well. We've doubled the size, like I said, of my recruitment team overseas as well as in India. And we are continuing to do that and pump away and see what we can do. Not only that, we are now trying to ramp up our center in Krakow in Poland. We are trying to offer jobs to people that are less fortunate, that have come in from less fortunate circumstances. We are trying to do that. We've hired our local leader there, is making best efforts. We have not formally inaugurated the center, even though people are working there. We're looking to formally inaugurate it in the next 45, 60 days. We do some splash locally to be able to pump up that as well. So therefore, I do believe with the deal wins we have had, the pipeline that we see today, the closures that we see in the current quarter and beyond, I am confident that we will definitely, so take the 13.5 to 15.5 as a floor, if I may. And the reason I said 13.5 is I wanted to give you confidence we will cross $1 billion this year, right? I wanted to be absolutely sure. And it is, so that's where we are. But longer term, I just want to let you know that we have reiterated in our earnings call yesterday the 1.5 billion run rate by FY25 as well to the market. Of course, internal aspirations are higher, but that's where we are.
It's great to have be talking to you when the aspirations are so high. Last couple of questions, we'll make it very quick. One is on the human resource angle. You spoke about hiring. You've maintained EBIT margins, whereas most people anticipated a decline in light of higher hiring and higher attrition. Do you reckon these are the levels where they stay, the EBIT margins, and a word on maybe what's the kind of wage pressures that you're facing?
Sure. So there are so number one, headlines, we will maintain our margins. We did increments for people some people in January. We will do the entire company's increments in July. We are looking at other instruments to ring fence our talent, critical talent, because that is important for us. No company does well without making sure employees are there. So we are doing various initiatives and that we can to ring fence talent, to make sure we give increments, make sure that people are there. Second, we are investing in their development. So not just technical development along with the Global Engineering Academy. We have tied up with INSEAD and others to provide personality development, persona development, personal development of our employees. So that's being done, number 2. Number 3, I would invite you to go look at my website. We've launched our vision, mission, and values. And what I'm proud about is my value statement and my value wall. It is very gratifying to see employees come together in all our centers, and we're doing it across globally, and paint our values on the wall. We're calling it the values wall. And we will then take that out. It won't have an impact in this quarter or next quarter, but I have belief and faith in the next 2 years, in the next 3 years, you will see the culture of L&T Technology Services develop around the values and the behaviors that we take forward. I believe this is required for long-term sustainability. If I was to look at immediate short-term, I can't keep everybody. I still feel, I'm an engineer at heart, I still feel bad when somebody leaves me. I think I've not been able to, share with them my dream about trying to become, top 5 worldwide, right? They don't believe in it. So, it worries, it hurts me. But having said that, it's a reality. People are leaving, but at the same time, new people are joining. What's critical is to hold critical talent that can manage this change and flux. So the LTM factor will weigh in. Attrition will stay at the same levels, similar levels in the next couple of quarters before it starts stabilizing. So if I look at in the quarter, we actually stabilized from last quarter. But because it's an LTM, you've seen that.
Got it. Perfect. Before we wrap up, Amit, a quick word on the Metaverse announcement. And this is very intriguing. I wanted to do a whole interview with you. We may do that later, but for now, one answer before we wrap up. Metaverse.
Sure. So if I look at the high-tech segment, I divided broadly into 3 parts. I divided into basics, which is things like semiconductor, into operators and infra. Let's call it telecom infra, and that's operators as well as telecom infra companies. And the third one that's developing and creating a life of its own is experience. This experience zone is all about platforms, software, consumer electronic devices, etc. We brought all that together under the Metaverse vertical. It's going to be headquartered. The vertical is headquartered in Chennai. The leader lives in Chennai. The work will be delivered globally, but we'll be building up talent pools in Mysore, in Chennai, in our existing talent pool in Bombay will be ramped up. And I'm hopeful that as I move forward, you will see some more announcements in this space, but work being done, excited about it. And I hope it will come at better margins than the rest of the telecom business, because telecom is our lowest margin business. And we want to get out of this. And that's one of the reasons why you saw 1% growth sequentially. I told you last quarter, we'll walk away from one particular legacy program, and we did. And I hope that all those dollars can be funneled into Metaverse as I move along and provide the high growth that we're looking for.
Seems to be exciting. Would love to talk more about it another day.
Absolutely.
But for now, thank you so much, and all the best for FY23.
Thank you so much, and thank you so much for having me, Neeraj.
The pleasure was ours. Viewers, thanks for tuning in. Bye.